welcome to another episode of Chats. All beautiful things happening here, man. Yeah, the week is great, the markets are great, everything is beautiful, man. The weather is beautiful, man. As usual, on Tuesdays, we analyze strategies of one of our best traders, man. The traders that are doing great things, maybe not in charts, but outside there, the traders that have inspired me during my journey of success, man. And today we are analyzing one of the best traders from Uganda. I said I'm from Kenya, so I have to make sure I represent my East African people. I don't want to start with home. I don't want to feel a bit biased. But let me start with Uganda. So apparently, for those who don't know who he is one of the biggest trader in Uganda, and he moved to Kenya. So he stays here, but he's in home, man. So as a Kenyan, why not? If he is too comfortable, too good with us, and too accommodating to a point where he has decided to come and live with us, we should try to at least make him feel at home as Kenyan. So that's why I've decided I'm going to analyze his strategy. So I have gone through his videos and I have found two strategies, if I'm not wrong. One of them is this one I'm going to analyze today, and the other one was about if I'm not wrong was about demand and supply. So it was a little bit hard to know which strategy to analyze, but I analyzed the most recent video he did, and here we go. This is a month ago. I don't know if he has another video, but this is the one I found to be at least and will be good to analyze because it's of this year. So his trading strategy is very simple. He is trading a very simple strategy, but if you don't know what he's doing, you will be left out. Okay, let's go number 5. Where are you going? So let's do this again. So this is what he's trading to. Okay, there we go. Thank you. So simply, the first thing he has to do in the market is identify the trend. As you know, being a trader, identifying the trend is one of the biggest things that you can do. And this is what he's calling the external structure, if I'm not wrong. Okay, and the external structure that depends on higher time frames, and his higher time frame that he has discussed in this trading strategy are 4 and daily. As you can see, we're on a daily, but I'm going to do the analysis on 4 hours because I have seen he has mostly focused on analyzing on the 4 hours, and we'll lower down up to our entries, and okay, we'll continue the video in that direction. So first of all, when he identifies the trend, it's either an uptrend or a downtrend. So let's put this one. I don't know. Let's first of all start with an uptrend. So when it comes to an uptrend, it's not happening to me. He has to identify these zones. Okay, these zones he has called them the distribution. Okay, if I'm not wrong, so these are the distribution phases. Okay, list, we will just put them like that. No need of writing the whole thing. You already know what we are talking about. So this is the distribution. Okay, and we have the accumulation phase. Okay, so his trading strategy has distribution, and the other one is the accumulation. So this is what have I done? Oh, sorry. No, it's not happening today. We're going to do it like that. Okay, so I needed this. Thank you. And we are not going to edit anything. So that is distribution. This is accumulation. So when you see those initials, you already know what it is. So now we can change the text color so that it can be very nice, so that it can't be that uniform. So as you have seen, this is the distribution, this is the accumulation. Okay, now he has identified the trend in a higher time frame. Okay, so this is also a distribution accumulation. Okay, distribution accumulation. Be very noting of this. Be very keen on this. Okay, accumulation, distribution, and these are the pullbacks. Now, first of all, these are the pullbacks. Let's put one of them there. Okay, there we go. Okay, so when you see that, you know that those are the pullback, distribution, accumulation, pullbacks. Yes, there's no need to. Okay, and the cycle repeats itself. Okay, so distribution, pullback, accumulation, distribution, pullback. Okay, that's an uptrend, and vice versa when it comes to downtrend. But first of all, let's look at this. So when it comes to those levels, he has also a very important level I have noted. This one. Okay, this one here, let's put it here so that we can't have so much cluster on this downside. So okay, there we go. These are called value breaks. Okay, where is this? Wrong thing. So these ones are called, here we go. Yeah, it's a valid B. So abbreviations. So distribution, pullback, accumulation, valid B. So the valid B is when these levels are broken. Okay, these levels are broken. So after this is where he has to go down to lower time frame. Remember, we say this is the external structure, so we have to dial down to 4 hours. So when we go down to 4 hours, that's where we are going to find our entry. So this is simply uptrend. Okay, downtrend is the opposite. All right. Oh yeah. Right, same case. Okay, same case. Okay, so this is distribution. Let's this is our dist. Remember abbreviations. That's our dist. Here's our, okay, we are going to put it here. Let's do this. I'm confusing this text and the square thing. So this is distribution, this is accumulation. Okay, and this is pullback here. Okay, let's do this, man. Let's have fun with life. Okay, that's pullback. So it's very easy strategy, but you have to understand what you are doing. So uptrend, downtrend. Okay, easy peasy. So what we're going to do, we are going to the charts so that we can try and identify them. I'm going to make this thing as quick as possible. I want to simplify it as fast as possible. So remember, we have said we are going to use the 4 time frame. No need of using very large and higher time frames, big time frames. So as you can see in this market, you can see we have a good setup here. When it comes to this one can be a very good downtrend. One, you see, we have the distribution. Okay, yes sir, if I'm not wrong. Yes sir, we have the distribution, pullback, accumulation. Let's note it. So we're going to use this downtrend. So here we go. We begin with this one. Come up to here. Very good setup. So okay, right, you can see them. You can see them, my brothers, can't you? Yeah, that's good. Okay, so remember we already analyzed them. So come here, zoom in a little bit. I want you to have a clear view as much as possible. So we have a distribution here, pullback, accumulation, blah blah blah. So these are major areas. Okay, the bigger time frame, remember. All right, external structure, that's the one. So we identify this. So this is going to be our accumulation level 1. All right, this is going to be another one. Okay, so this is going to give you the overview of the structure. All right, so that's another one, and here comes another one. Remember, this is not our strategy. I'm just trying to simplify it. It's a way of being grateful for having a great trader like $3, man. So this is it. Yeah, this is what we are going to use. Okay, for today, this is what we are going to use, and we are going to analyze on the downtrend. So we should come to this. There you go. So after that, you can go and look at those levels in small time frames. So this is 1 hour. 1 hour which was where are they? I can't see them. There they are. So this is good. This is 1 hour. This is 1 hour. So we are going to put them where we can see they are more valid. So I think we should lower them, because you can't just get anywhere. You can't just get in the trade anywhere. You have to look at the levels at which the market is respected. So these are not the things. These are not things to be told. These are things you should know as a trader. So trading view is a little bit slow. I came to realize I have very fast hands, and it's a good thing sometimes. But so let's assume this. Okay, this is what we are going to use. Remember, we have decided we are going to analyze just the downtrend. Okay, so this is what we are going to use. As you can see, the market is respecting here. So there we go. Okay, you can see that. All right, so when the market is respecting this one, we are going to be very observant on this level. So here say this is what he does. Okay, so we have already identified a zone. So this is the trading strategy. I'm just breaking it down because it's not money. So this is the accumulation. Okay, so then he lowers his time frame for entries to 15 minutes. Oh yeah, I hope we are going to see them. But a faster way of finding them. Have a faster way of finding them. There they are. So there they are. So this is what he does. Okay, remember, I've decided we are going to use this one. This is an example. I try to find as perfect as possible examples of what they are talking about. So remember, we are using this 4 as our entry. Remember, this strategy applies the same way and vice versa. Okay, so what he has decided, when the market comes back to this accumulation area, he doesn't take the trade immediately. Okay, because they are saying the market comes back to retest. Remember, we are in 15 minute time frame. He said he waits it back to come and retest. Okay, but he does not get in the trade within these areas, because most traders will get within this one, where I'm one of them. Okay, so to avoid drawdown and all that, remember, we marked something and we call it valid break. Remember when we said valid break? So that's what I think he looks within these zones. But what he have used the term is the neckline. So when the market breaks, comes back, retest, sweeps liquidity, as you can see here, the market has swept liquidity. $V will not get into the trade. he will have to wait until the market breaks this. Okay, as you can see, it has formed a neckline. Okay, let's do this. It has formed a neckline. All right, so this is where his entry is. After the break of the neckline, this is where he was going to take the trade. Okay, so this is a short, you can see, short position. There you go. So he will enter his trade here at 15 minutes or 5 minutes time frame, because I've seen him analyze small time frames. So as you can see, this is his trade. Okay, so the levels have given him his entries and his TP. So if, for example, he took this trade, he will be straight into profits. As you can see, this one straight. Very interesting week came into the market, but he will be very, very strong in the market, because remember, the risk reward is very good at that. Risk management, I mean, is very good. Risk reward 1:1.1, 1:1.92. That's an example of 1:2. Okay, so that's it. That's his trading strategy. Easy, no much complications. Easy. Higher time frame, 4 hours, day time or daily. He moves down to 1 hour to check his levels, and he moves back down, okay, to 15 minutes, and he enters into the market. And that's it. I'm summarizing his trading strategy. I don't want to go into details. That's why I'm doing a single thing at a time. That's why I'm doing just short. I'm not going to do a long setup. As you can see, if he was waiting for a long setup, this would be a very good zone to take that. Okay, this one, and he will be in profit. So that's it for now. Chat well out. Yes, sir. Let's support our traders, man. Let's support and have mad respect to you, dollar, for being one of the best traders. Yes, sir. Let's wait and see in the next video who will be the next trader, man. Yes, sir. Chat well out.